You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for the Thursday edition of everyone's favorite bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from TheOptionsinsider.com. Hope all of you are out there having a great trading week out there. A lot of fun stuff to sink our teeth into here on the network. Hope you've been enjoying the stuff coming at you already. Of course, the Monday episode of the old OB Crypto Rundown. After that, some fun stuff going on in the world of crypto. Great pro Q&A with our buddy Mr. Rich Excel. Does a lot of great stuff on all the asset classes, really, not just futures options, but equity options, crypto. Who knew we were so big into crypto? All sorts of fun, great pro Q&A there. Yesterday, of course, great options boot camp with our friends over there in Tasty Land. And then, of course, today, the beginning of our doubleheader today. First with the old OB, then later on a little bit of TWIFO this week in futures options. So a lot of fun on the docket. Of course, if you're not listening to the full network, you're missing out on all that. So first off, wherever you're getting this, upgrade to the full network. B, if you like what you hear, this or anything else we do, throw a couple stars, a like, a comment, whatever your platform lets you do. All of that in aggregate does help people continue to discover all of the content out there. And then, of course, if you want to discover more content in your lives, you want to go join us, let's say for the pro Q&A session we had yesterday. You want to join us after Vol Views for Options Oddities tomorrow, or get access to the live, or, man, we're coming up. Tomorrow's the first. Be giving away yet another. We just shipped one out yesterday. We got more coming out. Man, you guys are going to clean me out here. If you want to be the one of the ones cleaning me out, theoptionsinsider.com/pro. I'm just kidding. We have a lot of stuff in the old vault to give away. Theoptionsinsider.com/pro. The place to go to get your name in the hat. 1 day left for your name in the hat for the November Pro Trading Crate. Trust me, you want a piece of this action. As we go around the horn, let's see who wants the action on the show today. First, let's go out to the quiet, the sleepy, the tranquil hamlet known as St. Charles, where we are joined once again by the uncleist of Mike's, Mr. Uncle Mike Tusaw. Mr. Uncle Mike, sir, how goes your Thursday?
Always happy to be here. I mean, how can my Thursday possibly be bad? We're on the option block.
My thoughts exactly. Let's find out how it can be bad, though, because let's now dial the needle all the way to the dark and stormy shores of Maine, where he's always grumpy. He is, of course, the Rock Lobster. He'll find something to be mad about. Mr. Rock Lobster, a.k.a. Andrew Giovinazzi from OptionPit.com. Even though he might have a bit of a smiley face today, given the way certain things are playing out in the marketplace, Mr. Rock Lobster. How goes it?
The market, I guess, we're just going to say, is treating me well right now. We're being well treated by the market. But yeah, it's sunny but cold here in Maine. But you know, I don't know if we're going to talk about a certain oat milk company, but it is looking better, and apparently it's making our listeners happy, fading the grumpiness. Apparently, that's a new trading tactic.
Our listeners all got in on the Oatly train. They're all laughing all the way to the bank right now as well, of course. So we'll get into all that fun probably a little bit today, and we get into that a lot, regaling all of our trades and everything else over there in the land of the oddities. So head on over to the Pro if you're not part of that fun. You're missing out. It is a lot of fun. And of course, joining us from who knows, is he dialing in from SIBO East? Perhaps upstate New York, perhaps Toronto, perhaps from a phone booth near you. Let's find out. He is the Flowmaster, a.k.a. Mr. Henry Schwartz from the SIBO. Mr. Flowmaster, welcome back to the show. Are there still phone booths in your neck of the woods? I haven't seen one in quite some time.
Ooh, I haven't seen a phone booth in a while, but I am in the New York office for SIBO Global Markets. Right, I can see if I bend my neck and stand up, I can see the Statue of Liberty out our window. So, and it's a crisp, cold day here. Maybe not as cold as up north, but chilly.
At least it's not covered in smoke and fog like it was this summer. So at least you can see the statue. That's something. So you're winning there. Let's see if the markets and if all of us collectively are winning, listeners, because it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we, surprise, break down what the heck is trading. And it's another day, listeners, where it seems like the markets are kind of struggling to find their footing. We had a slight green on the screen across most of the major indices earlier this morning. We have dipped into a more split market. The Dow's up about almost 0.75%, about 0.7%. The S&P off about 0.25%, even though it was up slightly earlier in the session. So it has dipped in the red now. And the NASDAQ off about 0.8%. So again, it kind of depends where you hang your hat out there in these markets, exactly what kind of day you are having. Let's throw up our old friends, small caps, as well. Small caps also bucking the trend. Again, kind of what they do these days. They're up almost 0.25%, about 0.21% right now. So small caps and Dow in the green, NASDAQ pretty firmly in the red, S&P still struggling to make up its mind where it kind of wants to go today. And we're seeing similar developments out there from our friends on the vol space. VIX was at about almost a 13.5 not too long ago. Coming into right now, it's about 13.20. That still puts it up almost a half a point, about 0.45 to be precise, from where it was on the Monday show. But again, moving away from that dreaded 12 handle, so the hairs on the back of my neck can calm down a little bit. If we break back into it later today, then they go right back up. But we shall see. VVIX, the vol itself, at about a 90. So getting a little bit frothier again, up about 5 points from where we were on the Monday show. VXX 17.5, literally unched from where we were to start the week. UVXY 10.25, up slightly, up about 0.15. So they're managing to move away from the 10 handle, so they don't need to reverse split tomorrow. SVIX, almost a 34, 33.90, actually down 0.25 from where it was on Monday's show. And UVIX was at about an 18 when we kicked off the show, up about 0.2 of a point. I'm sure if we re-racked it right now, it'll be 5 handles away from them. Not quite that bad, but it'll be moving. Yeah, it's a little bit shy of the 18 handle right now, which is looking good for a little put fly I got kicking around over there. But let's go around the horn and see what we have cooking. Let's first go out to the aforementioned SIBO East. Mr. Flowmaster, it's been a while since we chatted with you because there was no Thursday episode last week for the Thanksgiving holiday. So it's been 2 weeks since we checked in with all things flow. What's been catching your eye out there in the markets both today and over the last couple of weeks since we chatted last?
Well, I was just looking yesterday. We're heading into final day of the month, and it was a heck of a month for equities, man. Oh man! After that dip we saw in September down to the end of October, I think that we're heading out flat-ish today, which is kind of how it feels will end up. We're looking at 11% for NASDAQ and 8-something% for the S&P in a month, which is pretty impressive. I was just looking at volume because I'm trying to update some annual stats. We had kind of a slow. It actually looks to me like it's the slowest month of the year. Average daily volume is coming in under 42 million. But you did have the half day after Thanksgiving, which is always the lowest day of the year. And things were kind of slow for a couple days, even this week. But things are kind of picking up again. And I think that we're going to see some pretty brisk flow into year end. With the market up here, a lot of people are very interested in hedging things off. And the other thing, that really jumps out to me is, we talked about kind of sentiment shifting, I think, on the last show. And, we're now looking at relatively low vol and relatively flat skew, which means puts are kind of, inexpensive relative to some other times in a volatility context. So, I think it's a good time to kind of people to take some chips off the table or hedge some gains. And, lots going on, though.
Get some cheap hedges on, maybe take some of your skin out of the game. It's up to you what you feel comfortable with as we keep rolling around the horn. Let's go out to the dark, the stormy, the ever-turbulent shores of Maine. Mr. Rock Lobster, sir, what is catching your eyes out there in the markets today and indeed this week?
Well, I just think, stocks we've had this huge rally, and it's hard for vol to go down. I guess that's the bottom line. When you have that rally so sharp, it kind of drags the at the money vol slightly higher. We get, it's not like we got crushed down to that lower vol level. And right now, I think we're looking for a catalyst higher. I mean, how far can the Q stocks drag us? We need something else to pull us, basically. So, it wouldn't surprise me to also see a little bit of rebalancing, like, okay, buy some cheap oils, maybe some banks, maybe some IWM, and maybe sell some of the Magnificent Seven. So you get kind of that sort of sideways action, and that definitely dumps the Q, keeps like a little tepid bid for vol, but people are sort of buying other stuff because Dow's up today 1%. What is that, Humana or 3M or something, one of those bigger number stocks in there. But that makes, it makes the kind of the market go nowhere fast, which is kind of what it feels like right now.
Nowhere fast, indeed. Nothing ever moves fast in the hinterlands of Chicago. People take it slow. They take it easy, even on a day like today when the markets are kind of mixed. Mr. Uncle Mike, sir, what's catching your eye as you're taking it easy out there in the hinterlands?
Like the Eagles song says, take it easy. I think they're doing their final farewell tour or something like that, coming to Chicago in the spring, from what I heard.
Most of them dead at this point?
I'm sorry, you cut out. What was that?
Aren't most of the Eagles past tense at this point?
Not sure, but I think the ones that are left are thinking they're going to be past tense in the near future, so they want to milk the touring cash cow last time.
Cash in that tour money while you can.
No doubt. Yeah, I think right now, with where we are in the S&P 500, it's going to be tough for it to make a run. In my opinion, I think it's going to be tough to continue to make a major run from here just because of the huge November with which we had. We're down at the 4,100 level. We make a run at the 4,600 level all over the course of November. And we are near the highs of the year from late July, early August. And so that's going to be difficult to break through. Not saying it can't be done, but that will be difficult. And so what I'm thinking here, me being the bull with which I am, maybe we can go sideways for a while, build up a little bit of a base in this market, and then make a run at the 4,800 level that we put in at the beginning of 2022 to see if we can take out some of those highs. The exciting world of bonds, they actually are pulling back a little bit today. That's kind of a new thing in bonds lately. They've just been have such a run lately, but the 10-year is actually selling off a little bit, and then the run with which we've had, similar with stocks and bonds going up at the same time for the month of November, we're actually having, I wouldn't call it a sell-off, but just a slightly down day, which in the bond land almost feels like a sell-off lately. So we're getting that. Silver, looking at SLV, we're above the 23 level again, so we are getting some movement there. Overall, it's not a major move today. I mean, it is above the 23 level, like I said, but we're up roughly 1% on it. It has a little bit of resistance around the 24 level, so it'll be interesting to see if silver can keep running as it has before. In terms of individual names, nothing is really sticking out to me of any of the things that I'm watching for the most part. But the week is, for tomorrow I'll be able to say, but the month is young. And we'll see where December brings us to where we're going and what we're doing to see how this year ends, and could be exciting.
Speaking of excitement, sir, while you were talking, I did the heavy lifting. I did the legwork, and I looked up that Don Henley's still alive. Joe Walsh still alive. I'm blanking on some others, but it was Glenn Fry, the one I was thinking of, who had passed away. So there are some who are now past tense, but there are still, I guess, enough members of the Eagles to cobble together to take some money out of wallets as they tour around the country one final time. As we keep on rolling, let's do our tour of the market, shall we, listeners? See what's lighting things up. And if you're asking, is it a banger Thursday heading into the end of the week? The answer is, it's not bad, actually. It's a little more paper than I might have expected, given what we're seeing out there. The VIX right now at about exactly 500,000 contracts on the tape, so that is nothing to sneeze at, especially when you see that the ADV taking another hit over the holiday week, down to about 705,000 contracts. That's down from about 940, almost 950 we were hanging out not too long ago. Remember I said that was pretty much unsustainable for VIX, and that's pretty much the case. But we'll see if we can put some more paper on the tape heading into the early part of December before, of course, seasonality strikes again. That probably comes back down. SPY, 4.5 million, so right at the upper end of the range we kind of expect right now, somewhere between 4.3 and 4.5 for this time of the show. The ADV right around 7.5 million there as well, so no slouch there. The S, once again, saying thank you to all things 0 day. 1.7 million contracts on the tape for the S. The ADV a little bit north of 3.13. So the ADV in the S, even right now, is still north of 3 million. So that's some serious paper out there. Small caps also, talking about serious paper, 707,000 contracts. That's not bad, especially when you consider that the ADV is right around 1.5 million. So it's not that far away from halfway to that. So we'll see if they can hit that today. And the Q's already on the rampage, already 2.5 million contracts on the tape. The ADV, 3.5 million. Let's now shift gears out to the single name side of the lens and see what it costs to break into the top 10 today. Is it a banger day? The answer is, not bad. Shrug your shoulders kind of day today as well. We're not at 350, 360 to break into the top 10, but we're also not at 150 or 160. So we're towards the lower end of the middle of that range, right around 212 right now. That's what it costs you to break into the top 10. So again, respectable. That gets us to our old friend Salesforce. They had earnings this week, and spoiler alert, they were a banger, up 7% today, or about 16 and a quarter, trading 246.78 right now. So just popping hard today for, CRM. Good for 212,000 contracts, and the number 10 spot. Number 9, right behind it. They were hot for a while, one of the new IPOs, and they kind of faded. Seems like they're coming back with a vengeance. Certainly today they are. This is Snowflake. 218,000 contracts on the number 9 spot. 186.60, up about 11 and a quarter, or about 6.5%. So obviously Snowflake also ripping the cover off the ball out there. I'm sure all these companies are just whispering AI to all of their analyst calls. And there you go. Stocks on the rampage. Whether they're actually doing anything with AI, immaterial. Just say it. Just say the letters, listeners. And you're off to the races. Speaking of AI, Man, they've had some AI drama of late. This is number 8. This is good old Softy, 226,000 contracts. Taking it on the chin a little bit today, 376.40 off about $2.50, or not even a percent, about 2/3, of a percent. Of course, you know all the AI drama that's gone on out there. I won't belabor that on the show today. Instead, we'll keep on rolling to number 7. That's our old friend Alphabet, a.k.a. the other part of the AI vanguard out there. 263 on the tape for them. They're also taking it on the chin a little bit today. 131.68 off about 3 1/3 today, or about 2.5%. So taking a little bit off the top for Alphabet. Number 6, we have the chip zone coming pretty much exactly where we expected, the number 6 spot. That's AMD, good for 312,000 contracts. AMD also selling off today, about $3.50, trading right around 120.40 to be precise out there. So AMD, number 6, 312,000 contracts. Number 5, got some usual suspects sliding in here. It's the artist formerly known as Facebook. Meta, number 5, 368,000. Meta taking a good drubbing today as well. Off 8 1/3 handles, or about 2.5%, trading 323.80 right now. So taking a little bit off the top. Of course, hard to look askance at that when they've rallied from sub 100 not too long ago. So quite the turnaround. All they had to do was just fire everybody, and bam. Meta off to the races. I'm joking, of course, but they're not only half joking. Number 4, let's go out to the fruit company. It's Apple, 392,000. That's pretty light paper for Apple. They're trading 188.40 off about almost a full buck, about 95 cents right now, about 0.5%. So taking a little bit of dark side dip there today for number 4. It's Apple. Number 3, actually number 3, yeah, it's the Amazonian. So keeping it in the A tech names, 144.92 off about $1.40, or nearly a full percent. So also taking a little bit of a dip out there for them. Number 2, it is the bleeding edge of the AI spear. It is NVIDIA, 876,000 contracts, 465.5 off about 1590, or about 3.3%. So taking a little bit off the top out there in NVIDIA land after they had some, I think, fair to say, polarizing earnings. They were good, but also not meeting the sky-high expectations that the street had set. So kind of falling somewhere in that middle of that range. How you viewed it kind of depends what you were thinking about the stock. And then, of course, Tesla taking the top spot again today. 1.43 million. Musk always making headlines today. I think he swore at some of the advertisers who were bailing on Twitter. Always a good move. 239.75 off about almost $4.50, or nearly 2% on the day for Tesla. Good for the number 1 spot. 1.43 million contracts on the tape. If you're thinking earnings are winding down, you would be mistaken. As I mentioned, a lot of big names are popping off this week. We talked about Salesforce. We talked about Snowflake. They were after the bell yesterday. We also had Five Below and Victoria's Secret yesterday after the bell. Farfetch. Talking about them a lot lately. Seems a lot on Options Oddities as well. They were before the bell on Wednesday, Intuit after the bell on Tuesday. And we have Dell and Marvell after the bank today. TD and Big Lots and Cracker Barrel before the bell today. So a lot still popping off. And luckily for you, we have some hot off the presses because we like you folks. Earnings move results, and earnings season reports. Let's go to Salesforce. I kind of just broke them down for you. They were pricing in about 5.2%. They delivered about 8.3%. So outperformance. We've been saying for a while, it's kind of been the name of the game this cycle. And so far, that is working. Let's see. Snowflake, for as much as they were moving, they priced in 8.2%, and they had delivered, as of the time of this report, of course, 5.5%. Of course, if you wait a little bit, they've moved about 6.5% now. So still underperforming that fairly juicy straddle, but not quite as badly. Five Below, they were pricing in 6.7%, and they delivered 1.9%. So a little bit of underperformance there as well. And Five Below is actually only off about 0.5% now. So Five Below is looking kind of unched. Might be one of the premium rights of the cycle here, listeners. Five Below. I guess Uncle Mike's been buying a lot in the premium dollar store area and keeping things frothy and juicy out there, or at least unched. Dell, after the bell today, they were at 75 even when we ran this report. They were pricing in $5.05. In the past, they've moved 5.07. Amazing how that works, listeners. So no extra juice, no discount, no nothing in Dell. Pretty much straight in line with previous numbers. Marvell, 56.10. That's where they were trading. They're after the bell today as well. 4.08 is what they were pricing in. 4.96 is what they've moved in the past. So a discount there as well. Kind of interesting. We haven't seen a lot of that out there this cycle. Let's go out. Let's switch gears to cosmetics, shall we? Ulta, today after the bell, 420 even. So pretty rich stock out there, trading at 26.5 for their straddle. In the past, they've moved 1868. So Ulta pricing in a banger announcement. My goodness. What's going on in the land of brick and mortar cosmetics? I guess we'll find out after the bell today. Let's look ahead really quickly. It's names everyone's all fired up about it these days. GameStop. Are we in the midst? Are they trying to make it yet another little meme stock palooza out there, listeners? We've seen GameStop moving quite a bit, giving up some of the luster, some of the ghosts today. A little bit shy of 15 right now, 14.91, off about $1.33. Of course, on the week, let's see how high did it get. It got up to about, looks like 17.25, 17.30. So they've been trying to pop it. It was $12 at the start of the week, so they did their darndest to rally it. They're pricing in about $3 in their straddle. In the past, they moved $2.40. So, given this action out there, you can maybe argue that's a little bit underpriced, but we shall see. And right now, the season listeners hanging out at about 111%. So coming in a little bit, it was 113 on the show on Monday, with 743 names reporting. If you want an in-depth dive into all this data, we had our buddy Matt on the Advisors Options show on Tuesday. That has now hit the network, so you can check it out on the on-demand side as well. As we keep on rolling, listeners, it is time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get crazy. Let's unleash the beast, the Eye of Sauron, that you too can play around with if you're messing around with Henry's suite of tools over there at SIBO.com. And Mr. Flowmaster, I see you're all fired up about CCL, so we're going to talk about Creedence Clearwater Revival. You're a big John Fogerty fan. Is that what we're going to do now?
I know the songs. I like Carnival. I've been on one cruise. So today's big trade, it's actually kind of interesting. The one that I noticed was just after 12:48 in the afternoon, and it was a sweet buyer of 5,000 of the Jan 16 calls. So this stock's at $15 today, but it's up almost $4 in the last month, right? So Carnival was one of the ones that got annihilated during COVID, and it really has taken its time coming back, and it's not at all where it was pre-pandemic. But so the 5,000 lot of these Jan 16 calls bought for 72 cents piqued my interest. But then when I dug a little deeper, I noticed there was a big three-way trade on the SIBO earlier, right after 10 in the morning. And that one, actually, I was able to kind of dig up what I needed, especially looking at trade history. And so the trade today was a buyer of 20,000, a seller of 20,000 of the Carnival Jan 12.5 calls for $276, and at the same time they bought 10,000 of the Jan 16s and 10,000 of the Jan 15 calls, 66 cents and $1.08. So basically, I guess probably the easiest way to think about it is two different verticals being sold, kind of as a package. So the Jan 12.5 calls, though, I could see that the 20,000 were opened on October 20th for 80 cents. And today's sale is closing. I can see it in the open close data. And, so that's a big winner. And then, the 15 and the 16 calls, I had a tough time figuring out really when they got in. It looks like they probably shorted those kind of a little bit as Carnival was coming up, just to try to kind of trim their delta a little bit. But this is a huge winner after a month on the stock being up. And so that last 5,000 lot of Jan 16 calls, it's possible the same customer decided to get back in and keep a little long on. But my guess is actually maybe somebody else saw this and was thinking there's something going on and put on a position. So, but that's Carnival. That's a lot of contracts for that name. I actually think the stock still got some room to continue to climb.
Well, clearly this person is as well, because they're not bailing. They're just getting up to a higher strike, taking some of their profits and putting the rest back to work on the 16s and indeed the 15s. So got some funky splits there. By the way, listeners, you can tell that Henry eats his own dog food because those little beeps and blips you hear behind him are the sounds of Trade Alert cranking away, doing the work. So you can tell he's crunching the data hot and fresh for you here. No stale data here on the show. It's all hot and fresh right here on the show today. I recognize those beeps and boops, Mr. Flowmaster. I've heard them once or twice in my day. Looking here at Carnival, I was just crunching some of the numbers as well while you were talking. Obviously, these cruise lines have taken it on the chin during the pandemic era. Carnival back in January of 2020 was $52. They crushed it all the way to, it looks like about $8 and change, $8.50 in April of 2020. And then they rallied it by June of 2021, got up to $30.50 again. So it seemed like everybody was pricing in the reopening, the return. We all know how that played out. By January of this year, it was back to $7. Actually, that was the low, around $7.50. December of last year, beginning of this year, $7.53. So they crushed it back to below where it went in March of 2020, which is kind of surprising. And then it rallied again this year to $17.25. This summer, actually, $19.04 it got up to in July before they crushed it again back down this week. It got down about $11. And then that was actually this month. That was back in around October timeframe. And as Henry alluded to over the past month, been a banger, up 31, almost 32% or 365. So these calls, I think you can call them well-timed. Also interesting that they're keeping the party alive. Mr. Rock Lobster, what are your thoughts on these well-timed calls and the fact that they're not just bailing, they're buying some more of the 16s? Oh, no, he has muted himself.
It was all those beeps Henry had. I couldn't handle it.
You got intimidated by his beeps.
Sorry,
wait a minute. I would have
had a window that's beeping and muted, but can't figure it out.
Yeah.
Sorry.
That was a terrible deflection on my part. I have actually done this trade earlier in the year in the summertime, and it worked out quite well. Like buying the calls, rolling them up. I mean, at one time, these cruise ships were worth a lot of money. I know the COVID thing the stocks they were in the mid 30s, like in June of 2020, I think, or July or August that year. And I don't think they've gotten back up there yet. I think people just jump in as this is going to be the cruise ships are just going to go back to the $50, $60, $70 range, whatever they were before, because cruising is still popular among people. But yeah, I don't think this, taking the money and rolling up is a bad idea. I do not.
The Rock Lobster, he's piggybacking. He's buying some of those 16s and 15s as well, listeners. So we'll find out how those work out a little bit later in the week. As we keep on rolling to another name that's caught the Flowmaster's attention this week, let's go out to ARRY Technologies, ticker symbol ARRY, ARRY. This is a solar name, listeners, trading $15.34, up about 43 cents or nearly 3% today. So nice little pop for them today. Let's see. On the year, a year ago, they were trading nearly $21. So it's been a rough year. They're off almost 27% or about $5.60. It's like their high came right around 26 2/3. That was actually relatively late in the year. That was in September they hit that. September 14th they hit that high. So they managed to rally about $5 and change through September. And then since then, it's kind of just been a drubbing. They actually crushed it back in November from about 18.25 down to 13.75 overnight. It looks like a bad announcement on that front. Really, really, really cleaned their clock. They've been struggling to dig out. They got as low as 13.34 in that period. They've since managed to claw their way back about $2. They're trading 15.35. Again, a lot of that coming today, nearly half a buck pop today. So interesting little run. Mr. Flowmaster, what did your eye spot out there in ARRY Technologies today?
So, yeah, I'm looking right now as I still can't figure out how to silence the beeping because I have we have the production version of Trailer running, and then I also get to play with a couple of development versions, which is where the good stuff is.
It's right. It just provides ambiance for the segment, sir.
Okay, good. So in ARRY, what caught my eye was just the fact that the option volume is 4 times normal, and it's almost all calls, 19,000 calls against 400 puts. And it's focused in these D17.5s and the Jan 20s. Volatility is up sharply. I can see that it's a beat up stock. But then I just saw another energy name. CVE is also very heavy, which is another energy. I don't know if it's solar or not, but that one's got 20,000 of the these 18 calls that look bought to me. So, these are big kind of directional trades. One thing I was going to mention that, that because the sentiment really, this run up really has people focused much more on calls. In fact, if you look at some of the biggest movers yesterday and the day before, there's plenty of little names moving 25, 30%. And, it's easy for me to see when kind of things are getting a little nutty, because if I look at movers on a normal day and you get a few outliers, 7, 8, 9% here and there. But when I see more than 10 or 20 names that have moved in the double digit percent range, it kind of makes me feel like there's some speculative capital at work. I'm not saying, whether some of these moves make sense or not, that prices don't have to make sense. But so, to see both of these energy names with a big upside call focus, you definitely have some people looking for some sort of a Santa Claus rally. Energy, I think, I have some friends I trade with who are watching the oil prices pretty closely too. So, everything's interconnected, of course. This is a pretty big slug of calls in both ARRY and CVE.
Speaking of CVE, really quickly, I thought that one sounded familiar, and that's because we just talked about it, Henry, earlier this month. You brought it up, actually, on the November 2nd show. Someone buying 10,000 of the CVE D21s for 39 cents. That was immediately post-earnings. The stock at the time was $19.59. Spoiler alert, they're a little bit lower now, listeners, 17 3/4. So intriguing stuff. And then, of course, we have the calls in ARRY as well, listeners. The D17.5s for 25 cents as well. So kind of an embarrassment of upside riches on the energy front. Mr. Rock Lobster, what are your thoughts? Is someone maybe deciding, hey, well, in CVE, you like the 21s when the stock was 19 and change. You gotta love these as well when the stock is 17 and change. And then these are the D18s, by the way. And then, of course, the 17.5s in ARRY, sir. What are your thoughts?
I think, the ARRY is a beaten down stock. CVE, I believe, I have seen call buying in that thing before, and it was and it didn't go anywhere. So I've seen that at the beginning of the year. I don't know if Henry has stats on that, but there has been some pretty sizable call buyers in there. And then actually I followed one of those. It led to sadness, some calls that went to zero. Was a little annoying. And this ARRY has been another one where I think this is kind of like a green tech, and the government's spending $400 billion on green technology, supposedly. They haven't spent it yet, but they're going to. So maybe this is a stock company that benefits from that. But let me see here. I mean, it's because, let me see for ARRY. It's a stock I did follow a little bit for a while. And then it
big action in August. And the stock did get a little bit of a lift, but it didn't last.
Yeah. Oh, I guess I was thinking of another ARR one. This is a biopharma one. I'm sorry. I had my signals confused on this one. Because there was anyway, but so, I mean, this one is, speculative buy, but as we know, according to our rules, if it's up on the first day, that's pretty good. So maybe this actually has the whiff of some potential here, because somebody, I know Mark covered some General Motors the other day where there's some cheaters before that announcement, and it does appear that somebody might think something's going to happen in this one. I would say from dead spec point of view, that's the most interesting of the bunch. The CVE, unless somebody's taken it over, I tell you, it's been tough trying to make money in those Canadian energy stocks. They don't really do what you want.
You know where else it's been challenging to make money is in flash storage. Our next name here is Pure Storage Inc., ticker symbol PSGG. They make flash data storage, trading $32.87, taking a whooping today, listeners, off a little over $5 or 13.3% today. So clearly today, no bueno. Earnings, they're saying earnings aren't the problem. I'm not sure if they just had earnings, so something's driving it down. If it's not the earnings, what is it? But either way, taking the drubbing out there today. On the year, a year ago was trading $29.19, so they're still up a little over $3 on the year. They crushed it to its low back in May of 22 and change before rallying it hard. By June 15th, it was trading $37. Hit its high for the year in September, $40.50. So obviously they are back below that again now with today's drubbing, certainly. So an interesting one out there. If this name sounds familiar, listeners, because we talked about it back on the show back in April, a long time ago. We talked about somebody buying the June 26-28 vertical 4,000 times. They paid 36 cents back when the stock was $22.96. Spoiler alert, the stock a little bit higher now, and it actually was in June as well. The stock on June expiration ended up closing at $37.74. So this one was a banger. Obviously this call spread went out at $2. They paid 36 cents for it, so $1.64. Not a bad do, as they say in their pocket. I went and checked while Henry was talking. That call spread was still open, so they rode it all the way to max profit there. Fast forward to today, and somebody's back up to the upside here in PSTG. In particular, it was the Feb 40s, 4.0s. Interesting. Again, like I said, the stock taking a bit of a drubbing today, trading $32.88 off $5. They bought the 40s 15,223 times for about 37 cents. They had to go through the offer to get this done. It is a 32 vol. Like I mentioned, there were earnings, I think, last night or this morning, so this is a post-earnings play. The stock was right about here when they did it, 33.09. So there are earnings. Actually, no, I take it back. The earnings are in February, but February 28th, so they're not going to fall within the expiration cycle of these options. So, Mr. Flowmaster, we've seen some upside swings for the fences before in PSTG. They worked out. It's like somebody coming back again, this time for size on the Feb 40s. What do you think, sir?
Yeah, I looked at the headlines. Their earnings were okay, but they did warn about something this seems to be why the stock is down so hard. But yeah, this one was on my list, and then I saw you'd already spotted it. I think that it's somebody looking for a pretty decent leg higher, or probably they picked the February's, right? So maybe after the new year. But cloud computing certainly gets people excited, and there's a lot going on there. That's a bullish trade for sure.
Mr. Rock Lobster, you said you kind of washed your hands of Canadian energy. How are you on Californian flash data storage? Are you still super bullish, or has the ship sailed for you on that one as well?
I'm just looking at this one. It's sort of it has all of the feel of catch a falling knife type of trade. So I think the stock fell apart, and they're jumping in, it looks like, to buy these calls, and it's not looking very good. I'm beeping and binging too. I'm got another trade close. Another winner. Woohoo! Chicken dinner.
Everybody's beeping and binging today.
Yes, there's a lot of beep. I guess we'll call this show beep ba bing ba ba. But I'm just, again, it's not my favorite play to just stock is down a bunch and then you just go in and buy the calls where the stock used to be 4 months out, just because I'd rather buy the 34s and sell the 40s and pay $1.20 for the spread. I just I guess it could happen, but I like the ARRY sneaky trade a lot better than this one.
Mr. Rock Lobster not feeling it. Let's see what you folks are feeling, listeners. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, buddy, welcome to the Mail Block. Got some folks chatting it up here. And looks like Nichols wants to know, didn't I make markets in Intel? Yes, I did. I did make markets back towards the tail end of my run on the SIBO in the glory days. I had to sleep over for a spot in that pit. I actually attached myself to the broker's par terminal. I was right there at the heart of the action. Heady time. It sounds absolutely insane to say that out loud now that I slept over in the cold atrium of the SIBO on the, no, I actually got the one bench. I was savvy. Everybody else was on the floor. But back then, it made a heck of a lot of sense. The days when people were throwing fists to get spots in Dell and everything else that was being newly listed over there on the floor of the SIBO. Speaking of Dell, Age in our chat says, I used to watch Dell earnings back in the 1990s when I was in college, along with Intel religiously. How times have changed. Yeah, Dell, I mean, are they private? Are they not private? Are they going private again? Are they coming back? That's the only saga that goes on with Dell these days. How many times is Michael Dell going to take them private or go public again? And you're right. Intel, we were joking just on the show last couple of weeks. Intel's starting to make itself felt again, but it's been a while since we've really dived deeply into Intel. So maybe those times are changing. You know, Microsoft manages to persist, so they were certainly a stalwart of those days. Speaking of what you folks are thinking, let's go out to some of our questions of the week. Well, last week, obviously a shortened holiday week, no Flowmaster. We were all very sad last week. So our question of the week, we had some fun. We said, hey, shortened holiday week, let's have some fun. Looks like everyone's buying crypto in anticipation of the new spot ETF coming this year. But we'll put it up to you quite simply. Will the new spot Bitcoin ETF be approved this year? Yes or no, no funny third option. And the yeses took it ever so slightly, 56% with no 44%. You yes folks who voted yes, clock's ticking. They're probably not going to approve a new ETF December 28th. So if it's going to happen, it's probably got to happen in the next couple of weeks before they take their seasonal hiatus second half of December down in D.C. So interesting. I don't know if I see it happening this year, but hey, who am I to second guess our audience out there? Speaking of our audience, this week, a little bit more salient question out there. Not really an options one, more of a kind of 10,000-foot macro question. A lot of people have been debating this Fed target of CPI. I've heard a lot of discussion about this lately, which is something we haven't really heard a lot before. Seems like 2% was kind of just baked into the bedrock of modern economic thought. And now people are starting to question that. So we thought we'd put it to you. We said, is it time for the Fed to revisit its 2% inflation target? Yes, it's too high, so it should be below 2%. Yes, it's too low. You want it to be jacked up. Or no, it's just right, the Goldilocks one. You know, I think of Goldilocks, I think of Uncle Mike. He's a guy who's always happy. Things are just right to him. Mr. Uncle Mike, sir, I won't even ask you about our Bitcoin ETF poll because I know that's painful to you. But instead, sir, what are your thoughts on the Fed's 2% inflation target? Is it too high, too low, or just right? And then where do you think our audience is falling?
Like we were talking about the other day, I think it's about the right level. Typically, the number that I like to use is 2.5%, 3% whenever I'm doing financial planning for clients over the long haul, of course. I mean, sometimes it's going to be more, sometimes it's going to be less. But I think that's a good target. We can live reasonably with, if you just think about it, if you're literally paying 2% more next year than what you're paying this year for your groceries and just things that you buy, that's reasonable. The problem is that 2% across the board doesn't always happen the way with which they say it is, or it's going to, or it could happen. But I think on paper it's good, but they have a long way to go to get there.
You think our audience is on the just right tip as well?
I would say, yeah. I would say yes, based on the fact that it's a target, and it's based on the target, not based on performance and actions and things like that. So I would agree the audience is as well.
All right, Mr. Flowmaster, same question for you, sir. Where do you fall on the Fed's 2% target? Too high, too low, or just right? And then where do you think our audience is falling?
Well, you know, I think that my guess is that some of the things I've read said, well, they may say 2%, but they can also change the definition of things because I don't think getting to 2% is realistic. And, you know, what we're all surviving, you know, with inflation much, much higher. I think they may change it to be, you know, one of these more vague ranges, you know, between 2 and 3%, where they can claim they're not really changing their strategy, but they're, you know, adjusting the definition to more of what reality dictates. So I don't think. What was the exact question?
2%, too high, too low, or just right?
Too low.
Really? Oh, you want them to jack it up? Okay. You think our audience is there as well?
Yeah, I think the audience is going to be on my side.
All right, and Mr. Rock Lobster, we got a just right and we got a too low. You might have to break our tie here, or maybe break the deadlock here. What are you voting, sir? And which way do you think our audience is going?
Is it time to? I don't think they should revisit. I don't think they should revisit it. I think 2% is a good target, and you just got to get the knuckleheads to stop spending money in Congress because they're knuckleheads. So I'm going to say 2% is good. I think the audience is actually going to say 2%. I think they're going to say it's too low, but I don't view that as correct. I think 2% is a good target.
All right, and our audience, a rare moment of agreement with our audience, 53.3% saying, nope, it's just right. They're down with a little bit of the old 2%, 26.7%, so a distant second place for yes, it's too high. So actually wanting them to go the other way of Henry, wanted them to lower it, which is kind of interesting. I did not expect that. And then 20%, so coming in a distant third, agreeing with Henry on the yes, it's too low front. I have to admit, I have a lot of issues with the Fed. I've expressed that on the show here many times. This is not one of them. The 2% CPI target to me never really bothered me that much. It always seemed fairly reasonable. As Henry mentioned, there is a lot of wiggle room baked into that as well. This one never bothered me, amongst many other things that the Fed does that irk me. One of our pro members, again, Age, chiming in on our poll here, saying, I could write a paper on how I generally don't agree with inflation targets by central banks, but I will pick just right as numbers over 2% indicate it's time to take a look at rates, but not knee-jerk insanity raising as Powell and company have been doing. Yeah, so put him in the just right camp as well, even though maybe damning it with faint praise out there. So intriguing stuff. Ad options, the place to go. You got about a day left, so those of you listening on the podcast will have a chance to play as well as we keep on going around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our Monday episode. So what mysteries await us through the weekend? Let's find out. Let's go out to the hinterlands first. Mr. Uncle Mike, sir, what mysteries, what worries, what unknown unknowns are you keeping an eye on throughout the weekend until our Monday show?
What mysteries and unknowns am I keeping an eye on? Well, there's always the mystery man. The mystery man can come in and sell a lot of stuff and hurt your long position, so always keeping a lookout for him. But wanting to see if silver can break out. Maybe we can get some type of breakout above the levels with which it's at right now. So that's something that I'm keeping an eye on. And then, as always, continuing to keep watch on the S&P to see if we might make a run at 4,600. I don't know if we necessarily will. Might a little bit, and then make a bigger run once we build a little bit of a base.
All right, Mr. Rock Lobster, same question for you. What mysteries and unknown unknowns are you keeping an eye on through the weekend until the Monday episode?
Well, don't we have like a non-farm payroll number tomorrow?
We do indeed, yes.
We do, yeah. So, I mean, we've got that. Also, to see if this a little bit of rotation can happen. Some people taking their money from their big winners, their big Q stocks, and rotating it into other stocks. It doesn't look likely that that's going to happen, but it could. It could happen, and that's kind of it. And if we get any kind of movement out of VIX, I'm sitting on a couple of VIX calls that are unchanged. So, as much as VIX cash might be going up a little bit, it's really not moving the needle in the futures very much. So, that is a problem.
You are a glutton for
problem,
punishment.
But it means that there's not that bid for vol it's there, but it's not aggressive. We'll say that.
How many times have you gone to die now on that VIX upside? You love those upside parts of your. You're doing strangles again, I'm assuming.
Oh yeah. No, the puts are up more than the calls.
Yeah, so you got the calls
but
for
I'm
credits.
looking at them and they're just like, can you move?
How many times have we had this conversation? Many times. We will have it again.
Yes. So I end up just making nickels and dimes and quarters on the whole strategy, and then maybe one day vol will pop. I mean, I did have some good sales. What was it, October? I can't even remember. Whatever that brief time, then VIX was 20. But there was not a lot of time to sell your upside.
No, there was not. And last but not least, Mr. Flowmaster, sir. What are you keeping an eye on until we can chat with you again a week from now?
Well, what I was playing with is we actually added a new set of columns to LiveVol Pro's options chain to show early exercise candidates, which is kind of always a challenge for people, right? Just kind of you can go look for the dividend and then check the corresponding put price, and we used to see huge in the money call trading. We still see heavy in the money call trading ahead of dividends, but actually having a column in there that just says this is a likely exercise on call side and on the put side. Remember, with interest rates up here, we see deep puts getting exercised, which confused the heck out of a lot of people for a while. And so I'm actually kind of running through, double checking, making sure everything's right. But I encourage people that if you've ever been assigned on one side of a vertical because of either the depth of the put or because there's a dividend, it's just kind of like a pain in the butt that's been solved by the ability to see, okay, this strike is a very, very highly likely exercise. You can never say they're 100% going to get exercised, but so I encourage people to play around with that in LiveVol or get a trial if you've never played around with it.
All right, listeners, and that music means we're done playing around for this episode. But for all of you out there who are always hitting us up, hey, is this a div candidate? Is this a div play? Is this paper out here to maybe capture a dividend? Maybe you want to check out some of what Henry's putting down there, some technology to help you spot those so they don't confuse you and you're not saying, wait a minute, I want to piggyback on this paper. That's not really paper. It's just a div play at the end of the day. Unfortunately, like I said, the music means we are done for today. But don't worry. Actually, we're done for the show, not done for today. Back again in a little bit with our old friend, Miss Carly Garner, to join me on This Week in Futures Options to break down all the action out there in the world of futures options. What's going to make it on the tape? Is it going to be, who knows, metals, rates, crypto, ags, FX, equities? Got to tune in to find out, listeners. That'll be coming up in a little bit. If you're listening live, stay tuned. We'll pump some fun stuff in there. Back in about 30 minutes with Miss Carly for TWIFO. Back again tomorrow, noon Central, 1 p.m. Eastern for vol views. Then, of course, after that for Options Oddities. Again, exclusively for you pro folks. And let's go around the horn and see what everyone else has in store for you. Let's start with the Uncleest of Mikes. Mr. Uncle Mike, sir. If folks want more Uncle Mike goodness in their trading, where should they go? What should they do?
Feel free to follow me on Twitter at Mike2Saw, TOSAW, or check out my website. Make an appointment to talk to me, stcharleswealth.com.
Make an appointment. He's not nearly as scary as he sounds here on the show. He's quite the pleasant fellow. stcharleswealth.com, the place to go. Mr. Rock Lobster, he is as scary as he sounds on the show. But maybe you want to talk to him anyway. Mr. Rock Lobster, if they want to talk to you, where should they go? What should they do?
Come to optionpit.com. We're all back here. I moved my weekly profit cycles over. And everything's going along well. So optionpit.com if you want to put your learning on.
Put that learning on. Our friend, the Flowmaster, will, of course, be joined by him again next week. You know where to go. CBOE.com, the place to go to kick the tires and light the fires out there and see what they're working on. Not just Trade Alert, but he mentioned LiveVol, a lot of other great offerings over there. If you folks haven't been playing around with them, you are missing out. CBOE.com/RMA, which is Risk and Market Analytics. That's Henry's division. That's all the stuff. That's not just Trade Alert. That's LiveVol. That's FT Option. Everything they've acquired over the years in the analytics front, all in one tab. CBOE.com/RMA, the place to go. Back again in less than 30 minutes now for TWIFO. Back again tomorrow, noon Central, 1 p.m. Eastern for vol views. And then after that, exclusively for you pro folks, for Options Oddities. And then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.